Hello again and welcome back to our course on Excel 2019 Advanced. In this section, we're going to take a look at depreciation, and in business in particular, if an organization buys a piece of equipment, it will normally be the case that they will plan for that piece of equipment to have a certain life and a certain value at the end of the life. And rather than show the cost of the equipment at the point of purchase, they will normally write off the cost of the purchase over the life of the equipment. Now, in order to demonstrate this, we're going to consider we've bought a piece of equipment and it's cost $100,000. That's the figure you can see there in C2. And we know that at the end of the useful life of the equipment, we can count on a salvage value of $20,000. And we can expect to write off that piece of equipment over 5 years. Now, when it comes to calculating the value of that equipment, and in particular the depreciation in value over that time, there are a number of different ways of calculating it. And the simplest way of calculating depreciation is the straight line method, whereby basically what we say is the amount of depreciation over each of those 5 years, in this case, would be the same. Now, of course, it's pretty straightforward mental arithmetic to work out what the depreciation over those 5 years would be, but we're going to use an Excel function to help us out with that. So what I'm going to do, first of all, is calculate the depreciation per year for this equipment. And the function I'm going to use is the SLN function. Note there the arguments cost, salvage, and life. Let's use the function arguments dialog. And of course, the cost is C2. And we know that's not going to vary, so we'll make that absolute. And then the salvage value, C3, absolute. And the life, C4. And make that absolute as well. Now note, one important thing here is that because this is straight line depreciation, it's going to be the same amount of depreciation for each of those 5 years. So if I was to fill down, you can see that it's the same. So let's now calculate the value at each of those 5 year ends. Now, a bit of a formula challenge here. The first one is pretty straightforward, as it's just C2 minus F2. The next one, on the other hand, is a little bit more complicated. We need to do C2 and make that absolute minus F2 plus F3. So that's getting a little bit messy, isn't it? So really what we need to do for G3 is to calculate the total depreciation so far. So I'm going to replace the F2 plus F3 by the sum function from F2 to F3. Now that's going to cause me a bit of a problem if I filled that down, because the formula in G4 would be the sum from F3 to F4, which is not right. So what I really need to do here is fix the start of the range that I'm going to sum. And now if I fill down, that looks to be correct. And of course I can apply the same principle in G2. So instead of just having F2 there, what I'm going to have is the sum from F2 to F2. So it's only one number that I am adding, but then I can apply that, fill it all the way down, and we'll get our final figure. So let's do that. And fill down. And there we go. So once again there, I've emphasized the use of absolute references, and one particular reason for doing that again is to prepare you for exercise 3, which I'm going to present to you in the next section. And in exercise 3, you're going to apply a couple of different approaches to depreciation, so please join me for that.